Let's keep it with earnings. Let's welcome on board Mr. Prashant Tripathy. He's, of course, the Managing Director and CEO at Max Life Insurance, joining us on the show. Prashant, hi, good to be speaking with you. I was going through some brokerage notes and they suggested that the VNB growth remained weak this quarter. It was down around 18% year on year. The margins as well were on the lower side, down 1200 basis point. Is this purely an impact of the high base, or there has been a bit of a slowdown and change in product mix?
So let me first talk about the good news. The AP growth is very good, 23%, highest perhaps amongst the top 10 players in the industry. For the quarter, we grew our new sales about 18%, which is double of the private industry average growth. Our number of policies are growing 20%. So overall, there is a huge sales momentum, significantly higher than the industry. Last year margin for the company in quarter 3 was 39%, and we have been repeating that kind of margin is unsustainable, predominantly because we had launched a new non-par design, and non-par last year was selling a lot. This year, since the beginning of the year, I've been saying that our margins will be in the range of about closer to 26-27%. And I'm very happy that we are in that range. Actually, for the quarter, we closed 27.2%. So your answer to your question is predominantly base effect, predominantly, in the good space, and I think we will finish the year very strong.
Okay, finish the year and hopefully strong at that. But how many non-par and annuity products you are planning to launch as well, because they come in with a better margin? And in terms of the strategy, what are you implementing to counter the fall that we have seen recently in the VNB at least?
VNB, again, repeating the same thing. VNB or margin is expected in the range of 27. That's where we used to be in FY22. FY23 was a bit higher because of certain things, higher mix of non-par, and we intentionally are balancing the mix of non-par in our business. If you look at the margin driver products, actually we are doing very well. If you look at protection and health segment, we grew upwards of 80% actually for the quarter and over 64% for the year. Our annuities are growing 52%, and in the quarter we are launching one annuity plan which just got launched. We are going to come up with another non-par design which is going to come in the month of March, and we are coming with a suite of riders, and riders are growing quite well, about 70% year on year. So we have high margin driver product designs, and because of that, March, January, February, March is the largest quarter. We will be able to drive business. The industry numbers just came out for your benefit. In the month of January also, Max Life Insurance is the fastest growing life insurance company.
Just to clarify that point, you said margins will be in 26 to 27 range or 27 to 28?
Between 26.5 to 27 nearabouts. I mean, that's my expectation. Let's see how the quarter goes.
I understand that, and I appreciate nobody can foresee that number exactly. But I also wanted to get a sense with respect to the investment that was expected from Axis. You've got the IRDA AI approval now. In how much time do you expect that to fructify now in terms of the flows coming in? And what would be the next stage? Is there any other corporate restructuring lined up?
That's a very good question. As you know, we have been on the journey for Axis Bank's stake to increase in our company, and we followed a stepwise process. First, they went on to 13, and now we have sought approval for them to go to 19.02. That approval was awaited, and I'm very thankful to the regulator for the approval. It's subject to CCI approval. We are in the process of seeking the CCI approval, and we got 90 days. So I'm anticipating that over 90 days, this deal should be concluded. The objective will be for the for the bank to go up to 20%, and then we will explore all options to look at further corporate events in terms of creating a listed entity, and that's what we will attempt after the overall Axis Bank investment in Max Life is completed.
And if I can quickly get a word from you on the banca channel, because that was a bit slow and muted, at least that is what some of the analysts are pointing out. When do you expect a pickup there?
So banca channel has been slow in the industry. You would notice, it's not just for Max Life Insurance. It's already come back up in the month of January. You will see our banca numbers to grow close to 30%, and I'm hoping that that momentum will be maintained. As you know, banks have their own challenge in terms of liquidity, and hence, there has been a focus to build the liabilities at the bank level. As things ease out for them, I'm sure banks will do well. As far as we are concerned, Axis Bank is a large partner for us, and our partnership is 13-year-old, and year on year they have done very robust growth. So I'm sure in in some time, that growth trajectory will be back for us.
On that note, we'll let you go. Appreciate you making time and speaking with us. So that's the management talking about the launches that they've lined up, the fact that the entire industry growth was a bit muted, but they managed to outperform, and they're expecting margins to be between 26.5% to 27% thereabouts. So that's the latest commentary coming in.